but guidance was raised, upgraded to 3 to 3.5%, and in reaction to that, we saw the ADR of Infosys rally up to 10% on Wednesday night. Yesterday as well, it cooled off a bit, but nevertheless, net it was an 8% move on the ADR front on Infosys over the last 2 days. So, market will be watching out for how the shares of Infosys react to the numbers. Aside of that, we have Reliance Industries numbers today, and over the weekend we had the likes of HDFC Bank, ICICI Bank reporting numbers. So all in all, over 30% of the index will be either reacting to numbers or reporting numbers. And in other earnings, other tech earnings, we have Tech Mahindra and Wipro as well reporting earnings. So yes, lots of action on the earnings front, and even the BMC election voting that happened yesterday, counting will happen today. So we will have the results of the BMC elections today as well. So a very, very interesting day. It's a Friday, but an action-packed one. In terms of the cues, global cues are fairly mixed. Wall Street had a good rally overnight. Asian markets were mixed. GIFT Nifty was hinting at a quiet but positive start. So we'll watch out for how we open for trade after back-to-back losses on Tuesday and Wednesday. So important to watch out for levels on the Nifty as well. 25,900 on the upside and 25,600 on the downside. Crucial levels to watch out for on the Nifty. In terms of stock-specific action on the show, we'll focus in on all the results, Infosys, Reliance Industries, what to expect from that, other earnings as well. And of course, all your stock-related queries will be in focus, so keep them coming in. We will try and get them addressed as well. But before we do all that, quickly take a look at the top stories at this hour. Stocks on Wall Street ended Thursday's session higher, rebounding from back-to-back losses as chip and bank stocks rally. Asian markets opened mixed after US and Taiwan ink trade deal. The GIFT Nifty, meanwhile, indicating a positive start for our markets in the pre-open as well. Positive ticks, the Nifty up somewhere around 30 points, and of course, Sensex also up in the green. Crude sees its sharpest drop since October as Trump softens tone on Iran. Meanwhile, gold eases as US jobs data lifts the dollar, and of course, as I mentioned, Trump has softened his stance on Iran, which which actually stoked a sharp fall in prices of crude. US President Trump adopts a wait-and-see position on Iran, saying he was told the killings have stopped and there is no plan for executions. However, he adds all options are still on the table. Infosys raises FY26 constant currency revenue guidance but leaves EBIT margin guidance unchanged. Margins come in lower than estimate and new labor code impacts profit. In other earnings, Jio Financials reports 8.8% decline in net profit from a year ago. HDFC Life reports numbers that were slight beat to estimates. Reliance Industries is all set to report its third quarter numbers today. Steady quarter expected with profit rising or seen rising over 6% on a sequential basis. Expect O2C segment to see strong growth, and retail and Jio also expected to lead the Q3 show. All right, in terms of the cues to watch out for, just recapping actually what happened on Wednesday's market action. Nifty ended below 25,700 amid a volatile session. The mid-cap index, however, managed to outperform and ended the day in the green, and so is true for the bank Nifty as well. Marginally in the positive, but managed to outperform nevertheless. Metal stocks were, of course, extending their gains. Silver, gold, they were hitting record highs, and metal stocks were reacting to that. So metal index gained for a third straight session. In terms of earnings, we had quite a few of them. In fact, the Nifty PSU Bank index was also fairly upbeat. Given the fact that mid-cap banks like Union Bank, IOB reported strong set of numbers, and the stocks reacted quite strongly to the numbers, which also boosted the PSU Bank index overall. Real estate sector continues to be hammered, but Puravankara and Ajmera Realty rallied post Q3 updates, so there was some respite for some of those realty names. Asian Paints was among the top laggards. Crude prices were rising. Of course, today Asian Paints will be in focus as crude prices have seen quite a bit of a sell-off overnight. Aside of that, in terms of earnings reactions, HDFC AMC, MRPL, these are some of the stocks that reacted to strong earnings. Fund flows, foreign investors remain net sellers. They have sold shares worth 4,780 crore rupees in the cash market on Wednesday. So selling once again exacerbated. DII net buying continues, 5,200 crore worth of equities bought in the cash market. And if you look at the put call ratio, the Nifty put call ratio fell to 0.81 vis-a-vis 0.86 in the previous session. Taking stock of some of the stocks that will continue to be in F&O ban are the likes of SAIL and Sammaan Capital, and these two counters have been in F&O ban for quite some time and continue to be under ban today as well. But on that note, to understand the texture of the market, let me bring on board our guest for today, Raja Venkatraman, co-founder, Neo Trader, joining in. Raja, lovely chatting with you. I think I'm talking to you for the first time this year, so wishing you a very, very happy new year. But after Monday's pop, we kind of fizzled out. We saw 2 back-to-back days of losses. However, we did recover from the day's low. In that sense, what would you expect from the index today? Which way are we headed? And do you expect IT to provide the leg up to the market today?
Yeah, good morning, Nanita, and wishing you and the viewers a very happy new year. Looking at the markets, I feel that the markets is having a lot of resistances at higher levels, and it's almost like you're walking on a dark lane. So you got to be treading your steps very carefully, because right now we are awaiting triggers here, and the triggers are not coming through, and that is causing a lot of problems to the entire trend per se. Now, when you rightly spoke about a huge bunch of we are in the midst of the result season, and we are expecting that there could be some good triggers provided by the leaders, especially HDFC Bank and Reliance, whose results are due tomorrow. So now, when you take a look at the result season, when you take a look at the Trump factor not settling in as expected, we are seeing that probably the Nifty could bottom out right now and maybe head higher. Now, the head higher will only mean that again at around 26,000, we see that the option data continues to show some strong call writing there. And we are noticing that the FI continues to be net sellers, and this is going to hold the entire market scenario. So now, when are we going to get a strong trended move? When the FIs take a breather, they actually turn buyers, and that's where we'll get a trend on the upside. Right now, what we are witnessing is some rally to the upside, where again the rallies are being shorted into. So in such a scenario, it's best to go on a stock specific approach. And for those who are participating in the current market scenario, if you are having that kind of temperament to trade on both sides of the market, you could trade that. Otherwise, I would say that wait for Monday to get more clarity on the outcome. So we are having some positive triggers even from the government front, right? The recent election which happened yesterday. Now, when all these things starts coming into the fore, and they start calming our anxiety, we will be able to see much more trended action. Until then, it's going to be a reaction which is going to last for a couple of days, and I don't think anything beyond that. Now, talking about Infosys, yes, the ADR did pump up, but then the ADR pump up does not directly translate into a meaningful rise on the domestic front. We need to see how that is accepted and how that is demoed. You may get a opening gap, but now the most important thing in today's market, either on the upside or on the downside, for the gap to sustain. Now, for the gap to sustain, we also need to see whether there are encouraging triggers that are available. And as we can see, after a long time, the large caps are performing. The likes of Infi, TCS, of course, did not perform. Now, Wipro is expected. So we got to see how these large caps are coming to the fore. And with the guidance given by Infi, I see that yes, probably it could be the bellwether for the IT. Let's see how these things turn out in the coming days. But then the trends remain mixed. So one has to tread cautiously, at least for the next week.
Okay, tread cautiously at least for next week. But just about 3 minutes to go for markets to open. What are your recommendations? Which are the stocks that one should look at in this kind of market where things are so volatile?
Yeah. So what I am noticing is that there has been a good up move in the cement sector. So I would say that the cement sector is showing some encouraging move to the upside. So I would go with a long in Dalmia Bharat at the current levels, and also ensure that place a stop loss below 2150 for an upside towards 2230. And another long in the PSU segment, because that is a sector that has been performing. So a good reaction which has come and some supports that has been found in Indian Bank. So I would recommend a buy in Indian Bank with a stop at 840 for a target towards 865.
Okay, those are the recommendations. But as we know, the Nifty Bank Index has been managing to outperform, right? Does the setup look more favorable on the Nifty Bank Index vis-a-vis the Nifty? And going into earnings of ICICI Bank and HDFC Bank that will report numbers today, the positioning on these two stocks, the pre-positioning ahead of numbers, or you may call it, pretty interesting. For HDFC Bank, ever since it reported its third quarter update, the stock is down 6-7%. But ICICI Bank, on the other hand, has been an outperformer. So, put into perspective, how would you look at these two stocks from the banking lot, and overall on the bank Nifty? What's your view?
Yeah, I would say that Bank Nifty has been relatively much more stable, and that has been the trend if you see over the last 2 to 3 months. It's just that it has not been able to fork out a very strong up move, largely because the private banks have not performed, and this time the weight has been carried by the PSU banking. Now the PSU bank continues to hold on, and they continues to do well, and they try to attract attention on the bank index per se. So I would say that going forward, they would be demonstrating more firmness and attract more participation, and they will drive up banking. So a level of around 60,500 continues to remain a very important resistance zone. So I would say that until that level is crossed, we would see some swing action in Bank Nifty. But now zoning down into ICICI Bank and HDFC Bank, always felt that HDFC Bank post its merger has not really, given that kind of flip which all of us expected. And that's been one of the banes for many of the investors out there. And that will continue to remain. And as you rightly said, HDFC Bank, after its updates, has come down. So it has reached some deep oversold position. If the result can be a trigger, then it could be a nice low risk opportunity to enter. Maybe not as an investing bet, but definitely as a multi-day bet. Now talking about
Right.
ICICI Bank is better
Okay.
in comparison. It's come out of its shadows,
Hold that
and I
thought,
see that
Raja.
it's
Hold that thought.
yeah.
I'll come back to you. Let's just take stock of the market open first. The first ticks are fairly positive. The Nifty is up 60 points as we speak. 25,700 back on the charts. On the Sensex, we have a 260-point up move. The mid-cap index is also moving in tandem with the benchmarks. 0.3% kind of gain coming in on the mid-cap index. The advanced decline ratio at the juncture is skewed in favor of gainers. Mind you, the advanced decline ratio saw a good improvement on an intraday basis on Wednesday. We were seeing that the advanced decline ratio had worsened to 1:3 during the day, but by close we saw the advanced decline ratio at 1:1, the market breadth returning to even Stevens. Right now it's skewed in favor of gainers. 998 advances to 772 declines on the NSE. Let's see, too early to really call it a trend for the day, but let's see. Right now things are looking fairly positive. Look at the Bank Nifty. That's moving in tandem with the other indices, up 0.2%, 59,680. That's where the Nifty Bank Index is at. But IT should be the pocket that we should pull up right now. Yes, the Nifty IT Index is up in excess of 1.5%. Infosys gaining 4.5% on the back of that guidance upgrade. Other stocks that are doing well are the likes of Emphasis. Emphasis saw a sell-off on Wednesday. In fact, mid-cap IT was out of favor on Wednesday. A good rebound coming in for Emphasis as well. Wipro and Tech Mahindra both report numbers. Ahead of that, both the stocks are upbeat. Of course, taking a cue from Infosys, most of these IT names are trading in the positive zone. HCL Tech also up 0.5%, LTI Mindtree up 2%, Persistent up 1.5%, so is Coforge. That's also up 1.5%. Real estate index among the gainers today. Good to see Realty Pack staging a comeback, mild comeback so to say, because this index has been hammered out of shape not just last year but this year as well, has been fairly downbeat for the real estate pack. PSU Bank extending gains from Wednesday up 0.5%. Autos, they have been witnessing some kind of selling pressure. Last few sessions, we've seen the auto index among laggards. Today, 0.3% kind of gain coming in on the auto index. But what's not doing well? Pharma. Pharma has been under a spot of bother in recent times, and today that's the top sectoral laggard, but just a 0.5% kind of cut. Metals are cooling off slightly. Mind you, gold, silver cooled off overnight. Dollar has strengthened after the weekly jobless claim data in the US. So some bit of mild profit taking when it comes to the metal pack. In terms of other individual movers on the Nifty, aside of Infosys, in fact, top three gainers on the Nifty are from the IT pack: Infosys, Wipro, Tech Mahindra. Shriram Finance, that's seen another upgrade that's coming from a rating upgrade coming in from S&P Global. So that stock is up 2%. M&M, Nestle, Adani Ports, NTPC, even Trent is in the green today. Power Grid, Kotak Mahindra Bank, Adani Enterprises, all these stocks are among the gainers. On the flip side, Cipla. We'll talk about this stock in a bit. That stock is down 3.5%. There's some bit of a setback, and we have brokerage notes as well on Cipla. We'll address that later on in the show. HDFC Life, after numbers, the expectations are fairly muted, and in line with that, it was slightly better, but still the stock is down 2.5%. Eternal resumes its downwards move, down 2%. ONGC, that saw good traction on Wednesday, is under pressure today, because crude prices, of course, have fallen quite a bit. Bharti Airtel, Bharat Electronics, Maruti Suzuki, Max Healthcare, these are among the other laggards. But I just want to quickly see what's happening on the Nifty 500 index before I get in Raja and talk about other stocks. On the Nifty 500, you have Zentech. That stock is up 7.5%. India Mart up 6.5%. Angel One reported numbers. Stock is up 5.5%. 361 VAM. That's also up 6%. IFCI. There's some update on NSE, filing its NOC for IPO. IFCI resumes its upward move. And on the flip side, let's take a look at some of the losers then. HBL Engineering, that stock is down 13.5%. L&T Technologies, guidance cut. So that stock is down 4%. MMTC, that was a good outperformer on Wednesday, is seeing some bit of profit taking. And you have Bharti Hexacom as well, and Oil India among the laggards. But yes, all in all, a positive start. Let's see whether or not we maintain this momentum and remain above that 25,700 mark as we progress through the day. But, Raja, coming to you, Cipla down 3%. In fact, the entire pharma pack has been under pressure of late. Any thoughts? What are you making of the moves on Cipla and, stocks like Dr. Reddy's, even some CDMO names, Laurus Labs, etc.? Any thoughts there?
Yeah, see, the way the pharma sector behaves, they're largely driven by these news flows. So, right now, what you're observing is some reaction to the news flow. And the gap down scenario, especially in good trended stocks like, say, Laurus Lab or Biocon, or I would say even stocks like Dr. Reddy could be a good opportunity to get into, because I see that the pharma is a good sector for doing swing trading. So rather than intraday trading, so any dip in these names should be definitely bought into. But I would say that Cipla, on the other hand, is showing some weakness out here, and I would say that if the fall today does not, it is not able to rebound from here, then it is actually giving us a major exit call from our portfolio, because from the likes of 1600, it's almost dropped down 200 points. So, which is not a good sign. And I would say that the pain could extend further, because every rise in Cipla now could be sold into. So, I would not buy into a Cipla, but definitely a Laurus Lab or a Dr. Reddy or an Apollo Hospital is something which I would definitely look for.
Okay, that's about pharma. But once again, touching upon IT, because I want to take stock of L&T Tech. It has lowered its FY26 constant currency guidance, revenue guidance, to mid-single digits, reported a 7.9% decline in net profit, saw an exceptional loss of 35.5 crore rupees, and the revenue from operations was also down almost 2%. Although margins did see some improvement on tighter cost controls, the constant currency revenue was down almost 3% on a quarter-on-quarter basis versus an estimate of 1.5% growth So of course, disappointing numbers, and the company is also shifting its focus a bit, and not, in fact, it is not going to focus in on low hanging fruits, so to say. So some bit of a change in strategy there. L&T Tech, the stock did see a good amount of uptick after its second quarter numbers, right? As the entire IT pack saw some traction, but that has fizzled out. And if you look at the last 1 month performance, the stock is down in excess of 11%. At these levels, what should one do? And would you at least look at the stock from a risk reward perspective, or would you look at other names, mid cap names like Persistent, Coforge in the IT pack?
Yeah, I would say that LTTS over the last entire, last 3 quarters of 2025 has not done really much. And now, once again, it's begun its journey once again to the downside. And I would say a 4,000 level is a very important level which it has defended over the last many months. And I would say that if that level is broken, there could be some very strong reaction to the downside. And overall, I have been maintaining that IT is not the picture is not very clear. The trends remain mixed, with the trend more on the bearish side than on the positive side. So, like we said, the names of Persistent and Coforge, they continue to do well because of their innovative approach, and they are continuing to hold on and perform better. So now maybe Infi also will join them. But overall, I feel that the trends remain mixed. So IT should not be considered as a overall on the positive side. I would say that the trends are remaining confused, and the pressure in LTTS is to the downside. So a 4,000 level will be an important level to watch out for. So I would not advise buying right now.
Okay, that's the view. Trend is more on the bearish side and not advisable to buy into an L&T Tech right now. But let's talk about the AMC shares, right? HDFC AMC reported good set of numbers. We saw the reaction come through on Wednesday as well. And today as well, the stock is extending its gains. I think it's up somewhere around 4%. In the last two sessions, it has gained almost 6% or so. And ICICI Pru AMC, of course, it's a recent listing. The profit rose 45% and total income was up 35.5% on a year-on-year basis. Both the stocks are upbeat today. Any stocks that you like within the AMC pack? Would you look at HDFC AMC?
Yeah, I would say that in the last few weeks, the metals, the PSU banks, and the capital market stocks have been able to hold on and generate some momentum. So I would say that HDFC AMC is showing signs of bottoming out, and with also an encouraging number, I can see that the stock run could extend, but the run will be limited, and I would say that around 2800 is an important level to watch out for. So beyond that, if it is able to sustain, then it could become a good upward traction for the coming months.
Okay, that's the view on HDFC AMC, and of course the ICICI Pru AMC as well, that reported numbers. But any thoughts on Yes Bank? I'm coming back to the banking, some of these banking names. There's been an update. The RBI has granted in principle approval to Sumitomo Mitsui Bank, SMBC, so to say, to set up a wholly owned subsidiary in India. Now, SMBC currently conducts banking operations in India in branch mode through 4 branches located in Delhi, Mumbai, Chennai and Bengaluru. Now, this approval allows the lender to establish the wholly owned subsidiary through conversion of its existing branches in the country. Of course, the SMBC acquired a 24% stake in Yes Bank, and of course, this approval from RBI allows it to convert its branches into subsidiary. Of course, sets the stage for potentially a controlled transaction for SMBC in Yes Bank. The stock is trading at 23 right now and has seen good traction, right? Last 1 month or so, it's up almost 8% or so. Would you look at this stock? It's not very far from its 52-week highs as we speak.
Yeah, see, when you're going to talk about stocks like Yes Bank, Vodafone, Suzlon, you got to understand that what is the kind of timeline you have. How much patience do you have to, see your investment? So it can't be a trading bet. It will have to be an investment bet. And how long can you hold on to this stock? Because the stock is heavily dependent on more news flow than any kind of triggers. So the triggers which are emerging are encouraging, but I would say that if you're having say a 1 year horizon, then the up move can emerge and take it towards the region of around 40 levels. Otherwise, I see that the stock is going to oscillate in this kind of movement only. So I would say that you have to first decide what kind of trade which you want to take. If you want to take a long-term bet, then yes, there are potential is definitely developing and it's looking encouraging. But if you're looking from a short-term perspective, then you should skip yes bank.
Okay, that's the view. But let's now shift focus to all the viewer queries that we are getting at this juncture. Quite a few of them, and I have tried to squeeze in as much as possible. But MCX, that's one query that's come in from Anil. Wants to know the long-term target or the view on MCX. In fact, I think his time horizon is 1 year. Stock has been on a tear, hit a fresh 52-week high today as well, up 12% in the last 5 sessions itself. At these levels, would you suggest caution? Would you wait for dips to get in, or do you see room for more upside? And would you advise taking a positional bet right now?
Yeah, so one thing which I always maintain is that when a stock is on a tear and when even the sector tailwind is also there, the probability of the stock to go higher is very much on the cards. Now, at such a juncture, how should we plan? We should first enter into that stock because the stock is going to move like you. If you'll ask me whether I should enter into the metals now, then the obvious, when you look at the price and say Hind Copper has moved by 150, 160 points in just a matter of 1 month. So now, is it worth entering? Answer is yes. But then you should not enter 100%. You should enter some portion of your investment, and then some you should look to buy on dips because I see that the prices doubling from here in the next 1 year. And any dips closer to the region of 2000 would be a good support region. So that's how I will plan my entry into MCX.
Okay, that's about MCX, and I hope that answers your query. I had spotted a query on Geo Finance from Ranjit. Wanted to know the short-term view on the stock. Of course, numbers came out despite an 8% drop in profit. The stock is up 0.5% today. But any thoughts here on a Geo Financial?
Geofinance has not been able to generate the kind of momentum on the price action, but on the news flow, definitely there are lots of things that are buzzing around Geofinance and closely linked to Reliance. So there is a hope which is tied to Geofinance. But I feel that there are better prospects than Geofinance to trade in. So I would say that one should have, even if you're going to look at it from an investment perspective, one should have a clear risk below 275. So below 275, I don't think one should be holding on to Geofinance.
Okay, that's the view on Geo Finance. But just a disclaimer here. Money Control is a part of a network 18 and of course which is part of Reliance Industries. So before making any investment decisions in Reliance Group of stocks, please do consult with your financial advisor. But next, I want to take up a query on the real estate pack that has been hammered out of shape. Manish Kumar has written in, wants to know your thoughts on Prestige Estates. The stock is upbeat today. In fact, last 5 days it has seen some traction despite the real estate index being out of favor. But the stock, 6 months you've seen a double-digit decline, and it's quoting at 1540 or thereabouts at the current juncture. It's quite a way away from its 52-week highs, and as we know, real estate stocks have been out of favor. Prestige Estates in particular, how is this stock poised within the real estate basket? And would you look at this stock from purely a risk-reward perspective? Good time to get in after the kind of badgering it has seen. Do you think real estate stocks are poised for a good turnaround anytime soon?
Yeah, I would say that the stock has definitely come into some good set of supports, and with the Bank Nifty showing some poise to move higher, I would say that if the momentum shifts on the upside, then I would say that this could be a good risk to reward ratio to get into Prestige Estate. So yes, this is definitely a good time to get into the real estate, and if the real estate basket, of course, I would wait for the news flows to emerge over the weekend And once the market starts picking up, then this could be a good stock that you can consider.
Okay, that's the view. Once the market stabilizes or real estate stocks stabilize, Prestige Estate's a good bet to look at. There was a query I spotted on UPL coming in from GC Prakash. Wants to know what's the short-term view on UPL where one can book profits. He's taken position at 775 rupees. The stock is at 786. So slightly higher than his buy price. What would you advise, and any targets that he should be watching out for?
Yeah, so the entry has been at a good level, and I feel that UPL has more room over the next, I would say, over the next 6 months. It has got room to move towards 900. So I would say that one should hold on with a stop below 720 because it definitely augurs well for an up move here, and I see that the momentum could build up, especially amongst the chemical basket. UPL definitely is a preferred bet.
Okay, UPL a preferred bet among the chemical basket. Any thoughts on Bharti Airtel? Advait Joshi has written in. He wants to know the long-term view on Bharti Airtel. Of course, it has seen some bit of a correction in recent times. Would you look at Bharti Airtel?
Yeah, Bharti Airtel has been moving along quite swiftly over the last 3 years, and it continues to attract domestic as well as institutional attention. I would say that in the telecom space, Bharti has been performing quite well, and I would say that the any pullback in this stock should be bought into. So currently, it is witnessing a pullback. So you can keep looking at the pullbacks. If you want a more deeper pullback, that will be closer towards the 1850 region. So these are two levels which are clear support for Bharti.
Okay, watch out for those levels on Bharti. I hope that answers your query. Just a couple of more queries to go then. Dr. Naidu has written in, wants to know your thoughts on the prospects of NBCC. The stock is 0.5% up, not doing much today, and it hasn't really done much over the last 5 days either. Any thoughts?
No, I would say that this stock does not give the kind of run which one always expects, and this we have discussed earlier as well. So basically, it is stuck in a range between 125 on the upside and around 100 on the downside. So I would say that this range could persist for a while. So unless and until this range is broken, one should not be looking to 100 on the upside. If it is not broken, then it's best to ignore this stock for now.
Okay, that's the view on NBCC. Hope that answers your query. There's one stock that's been in focus, and that's IFCI, of course, ahead of the NSE IPO. Saw some correction on Wednesday, but the stock has been on a tear. Anil Kumar wants to know your thoughts and whether it's advisable to buy at current levels.
Yeah, looking at the kind of news flow and looking at the kind of participation which we are seeing today, it's clear that there is a fresh momentum that is getting built in. So yes, at this current juncture, it augurs a buying opportunity, and one can look at participating in this counter as volumes are also spiking. So it says that there could be some fresh move here. So yes, it's definitely worth participating.
Okay, definitely worth participating. One stock that I noticed, I think it was HBL Engineering. That stock is down 11%, and it's pertinent to take up a query on that. That's coming in from Shweta Naidu. Buy price is 911. Should I book losses and exit, or should I hold an average? The stock is quoting at 780 right now. It's shaved off 11%. I mean, she's making quite a bit of a loss here. What should she do?
Yeah, the overall prospects of this stock is showing that yes, there is some profit booking in store, and the reaction today is clearly indicating that there is pressure to the downside. So I would say that one could hold with a stop at 750 levels, because beyond 750, where there is a nice value support region, the prices could move in further, so it can go down further. I would definitely not advise averaging out here because the trends in the stock have turned to the downside for now. So your risk or your stop could be at 750.
Okay, I hope that answers your query. Last query then. This one's coming in from Ram. He wants to know your thoughts on Alchem Labs. Hasn't sent in a pointed query. I know we've discussed pharma stocks, but particularly for Alchem Labs, what kind of levels should one watch out for? And if one has positions, how should they approach? And if one wants to get in right now for fresh buying, what should the approach be?
Yeah, after a while, the stock has shown some movement here, and over the last 3 to 4 months, the stock has managed to hold on to the high level. And like I said, the pharma remains mixed. So, Alchem Lab is on the positive side, and the current juncture augurs well. You can buy at current levels. You can use dip to the region of around 5,700 also to get into. So overall, the stock remains on the positive trajectory, and I would say that one can look for some encouraging moves in the coming weeks. So this is definitely a hold, and if you want to participate at current juncture, also it is a buy from my side.
Okay, Alchem Labs a buy from Raja's side. But with that, we've come to the end of the query segment. If we couldn't take up your queries, please don't get disheartened. Keep them coming in. We'll try and get them addressed as and when you send it. Raja, thanks a lot for taking out time and joining in. Always a pleasure. Look forward to more interactions and have a great weekend ahead.
Yeah, same to you. Bye.
Thanks a lot. On that note, we're cruising along, looking at the market. We are up 40 points on the Nifty, 25,700 holds for now. Let's see whether or not we manage to do that as we progress through the day. IT, that's the sector that's grabbing the limelight, 2.5% gain. Infosys up almost 5%, followed by the likes of Emphasis, Wipro, Tech Mahindra, all of them gaining anywhere between 2 to 5% apiece. On that note, let me bring on board the big market voice, Sushant Bhansali, CEO of Ambit Asset Management, joining in. Sushant, always a pleasure chatting with you. First of all, wishing you a very happy new year. I don't think we've interacted this year so far. But, after a 10% gain in the calendar year 2025, we've got off to a somewhat rocky start. We did see some kind of a pop on Monday after the commentary coming in from the US ambassador to India, but that kind of fizzled out. But looking at the earnings, things are not looking all that bad. Do you expect a turnaround pretty soon, or do you think the tariff turmoil and FIS sell-off, these are some of the factors that would keep the index or keep the market at large under pressure?
Hi, good morning. Thanks for calling. I wish you a happy new year too. Yeah, definitely. I think 2025 was challenging, although the year ended with a 10% gain and 10th year in.
Towards large caps, or would you still say that mid caps are better poised? Especially since the commentary alluded to the fact that there's been some visible improvement in demand compared to the last quarter in AI services, etc. And also the kind of AI pivot we are seeing from some of these IT companies. What would your thesis be when looking at IT? Mid cap versus large cap, commentary wise and numbers wise, what did you make of it?
Yeah, I think mid cap will continue to shine like they have for the last couple of years compared to large caps. I think at least first half of this calendar year, mid caps will continue to outperform the large caps. Hopefully, towards the second half, we'll see large caps making a comeback in terms of growth and margin trajectory. But at this point of time, I think mid caps still, I think from valuation comfort, you have large caps from a long term perspective. But from a return perspective, first half of this year, I think still mid caps are the place to go.
Okay, I just want to ask you, in this leg of the volatility that we have seen, what is your strategy at the current juncture? Are you guys sitting on cash? Are you guys looking to deploy? If yes, which are the pockets that are catching your attention?
Yeah, I think selectively cash creation mostly in, I think, small cap segment. Large caps, I think there is no point on creating cash because they're not, the opportunities are not expected to be very fruitful like corrections expected. But definitely in small caps, I think we are waiting and watching. The earning growth so far has been, I would say, in line and will probably a bit ahead. But these are early days and companies having good earnings result quickly. while the second half of the earnings season is what decides I think the overall earnings season. And we keenly wait. I think small caps is where I think we are a bit skeptical, and in fact, the earnings season will coincide with budget as well. So, a combination of those two can drive the markets again, and we're waiting for reactions to both of them.
Sushant, a lot of these market experts and fund managers that I have spoken to have said that perhaps 2026 could see mid cap staging a good comeback. Of course, last year we saw both mid and small cap indices and stocks underperforming benchmarks and large caps. Would you say that mid caps are ripe for a comeback? And if one has to go looking for value within the mid cap space, where would you look?
Definitely, typically mid and small cap go down together, and that's what we saw last year as well. And mid caps make a comeback quicker than small caps, so which is what I think everybody is expecting. That towards I think fiscal year 27 or most likely in H2 of this year is where mid caps should make a comeback. And towards the end of the year and early next year, I think is when I think small caps should start shining as well. From a sectoral perspective, I think mid cap is a small segment, just about 150 odd companies from a SEBI definition or definition perspective. So not too much of sector variety, but BFSI, I think on the mid cap side is I think one of the key sectors alongside I think healthcare and a bit of pharma names. I think these three will be where we'll lead. The consumption names are mostly in either large caps or small cap, not too many mid cap names on the consumption basket, which can be a big theme for 2026.
You mentioned BFSI. Bank credit growth has outpaced deposit mobilization, and that has pushed the system credit deposit ratio past the 79 to 82% mark. And recently SBI research has flagged rising risks around this trend. From your perspective, does this elevated credit deposit ratio pose a structural liquidity concern for Indian banks, and how should investors think about the implications for margins and funding costs going forward in the wake of all this?
No, I think it's a big trend, given that more and more money is flowing towards capital markets and bank deposits. It's been an area of concern. I think government also has taken many steps in the last couple of years to get this anomaly right. We look at the capital gains, how the treatment got changed. I think a large part of it goes towards channelizing the savings to deposits as well and make them probably in line with capital market instruments of the fixed income. And I think we keenly wait if there are any more incentives for deposit mobilization in the budget, because the banks really need something of that sort to. I think the growth of economy banks play a very important role. The lenders play a very important role, and if they don't get access to deposits, growth, there will be the credit growth will suffer, and this will ultimately lead to the economic slowdown as well. I think government also will be putting effort behind getting these deposit rate right.
Okay. All right. Any other pockets that you would look at, the likes of defense, EMS for that matter? EMS has seen a very, very sharp correction, severe correction, so to say. The likes of Dixon Tech, etc. Post the kind of correction we've seen, would you say that there is room for more correction, more froth to come off, or do you think the investment case is still strong and now is a good time to look at these names?
It's a very volatile sector from a market's perspective. The long-term story, I think, remains intact. They are here to grow. There are more and more opportunities getting into the AMS side. What started with a simple mobile phone or washing machines, etc., is getting into many more things. Hopefully, we'll get into, as we saw in autos, that when the OEM started having bases out here with auto ancillary, the way it moved in the between 80s and 90s and early 2000s. I think similar sort of play in consumer durables. I think EMS will play a big role, and with chip manufacturing also coming in, hopefully there will be a lot of value addition by these companies. So long-term trend, I think it's it's a great sector to be in. From a short-term perspective, I think liquidity drives both mid and small cap, which is where most of these players are. And it's more about, I think, liquidity deciding the price volatility as compared to earnings. Earnings will always be volatile in this sector, depending on how the summers go and how. So long-term investors, I think, should keenly look out for good opportunities as and when liquidity throws them to investors. And for select companies, I think that this might be a good time in the next 1 or 2 months. Also, we should look at what are the announcements regarding PLI, etc., because that also plays a big role in this sector. And so one should wait, I think, till budget for these announcements before taking fresh allocations.
Okay, wait till the budget. But one sector that has been hogging the limelight is the metal pack, right? You've had the likes of Vedanta, Hindustan Zinc, Hindustan Copper, all of them, taking off, and how, in tandem with how global metal prices are moving. We'll talk about the hard assets in a bit, but in terms of metal stocks or metal as a sector, would you stick to the non-ferrous ones, or would you prefer ferrous? Because now that steel safeguard duty is also in place. But in terms of an investment case, which side would be a compelling bet?
Very difficult. 2025 was probably a metals year. It started from precious metals and went to ferrous, non-ferrous, everything. I'm more worried about the impact of metal prices going up on earning growth or rather margin profile of companies which use them as raw material for 2026. That's a bigger story to watch for than looking at, because there are very few players on the metal side, and that's quite volatile. They are a good trading place, but for long-term investors, I think it becomes very difficult to invest in these sectors. So one should, I think, they're not cheap. So trading wise, probably there are still opportunities which will come in. It's quite volatile as well. But I think the impact of many of these metal prices, which are as raw materials for companies, I think these are ones one should be watchful for. There will be huge margin impact this year, because there has been big inflation in most of these commodities in the last 3 months.
But what should the strategy be if someone holds metal shares? Is it a good time to take some profits off the table or stay invested?
Depending on which commodity you are in, but yes, I think timely booking of profits is a good strategy always. And one should probably, I think this is not a time to increase your allocations, and rather definitely either maintain or reduce your allocations selectively. You can rotate from one to other as well if you are wanting to maintain the allocation, looking at opportunities which can look for that better return from the next 2 to 3 months perspective. Very difficult to take calls of 6 months and 12 months in this segment, because prices are decided globally, and global geopolitics, we don't know which country will get threatened, which country will be what. So it's very difficult to take calls on global prices.
Yes, that's correct. But what are you making of, or how have you really navigated this up move in hard assets, in terms of asset allocation? Because 2025, of course, we saw stupendous gains, and of course, with all the geopolitics playing out with respect to Iran, Venezuela, etc., we've seen the silver and gold prices continue to rally. But do you see much more upside from here? And in that sense, have you increased allocations? What are you advising your clients? How are you going about it?
Precious metals, I think that pack will continue, I would say, growth a little bit at a slower rate than what happened in 2025, because the reasons behind the surge are very much still there, and that shall continue. So once I think dollar again becomes sort of a preferred currency for global trade and central banks, is when I think this growth will probably subside. But till then, I think it will continue to grow. And that's, I think, the biggest factor in this whole really. And one should keenly watch. The more volatile the global geopolitical environment is, I think the more volatile this segment will be.
One more question on financials. I want to go back to because just want to understand your preference between banks and NBFCs, because gold financiers, of course, have been doing well in tandem with how the gold prices have moved. On the other hand, you also have financials where a lot of foreign capital has come in, the likes of Shriram Finance, even Yes Bank, and a lot of these smaller banks as well. So, what's the preference between banks and NBFCs right now? And even within the NBFC space, is there a particular segment that you're looking at?
I think all segments are the entire BSE pack, the all lender pack, I think is looking really good in terms of, I think credit growth should come back massively towards, I think in FY27. Everybody is excited towards that. The rates, I think, have reduced to the extent they had to. I don't think there's too much of lowering of rates now into play. So from that perspective, there will be, I think, whatever margin correction people had into their mind, it has all played out in the prices many of these stocks already. So the entire pack looks good. Definitely, I think banks will be the first one to get the benefit, but NBFCs, I think, as credit growth picks up and as NBFCs are able to access capital from banks as well, I think NBFCs, some segment of them have started. I think auto and gold financing companies have done really well. This is both the certain gold prices as well as demand on the auto side. I think other segments, especially consumer lending, that I think should do really well. It has not done that well because the whole consumption pack itself was not doing well. But whatever measures government has taken in the last 15 odd months, starting from direct tax cuts, indirect tax rationalization, liquidity infusion in the system, getting, I would say, even from central bank to get NBFCs again back into line in terms of providing liquidity through banks to them. All of these things, I think, will get a lag effect on the consumption side, and we expect that probably in the next few months itself, the consumption should come back, and that should lead to the consumption led NBFCs to do really well in FX.
Okay, got your point. But within the consumption pack itself, what are you more tilted towards? Staples, durables, premiumization? What is it that you would look at? And also within the auto space, how would you really play? Because Q3, sales for autos has been very good. Of course, that was being expected as a result of the GST cuts. But would you say that much of the upside is already taken place in autos, and should one look at auto ancillaries instead? How are you playing all this, the entire consumption theme as a whole? How are you really playing it?
So I think auto has got a very different flavor compared to the whole consumption pack. I think auto started the whole consumption rally, and I think will continue. There are many state elections which are, I think, in the first half itself. There are about 5 state elections. So that will be a big driver for both auto as well as other consumption pack. The interest rates have come down, so financing will be cheaper. Direct tax benefits and indirect tax benefits, staples and etc. will also be available. So a good part, I think, on the consumption side. Staples versus discretionary, I would say that more demand will get affected on the discretionary side than staple side, because financing etc. will help more the discretionary side than the staple side. So more gung-ho on that. Having said that, staples as a category has not made meaningful returns in the last 3 years. There will be, I would say, a bit of sector rotation, investor preference. It will also depend on how other sectors play out. I think staples will be a natural beneficiary of hunting downgrades in other sectors. So if IT doesn't come back the way it has continued, I think, in the last 1 or 2 years, if credit growth doesn't come back, then consumption staples will be a natural beneficiary of sector rotation.
Okay, got your point. Last question, really, if I were to ask you your top 3 themes in a pecking order, how would you, really, rate it, and what would you say?
Yeah, so I would say that like if I have to pick 2026 themes, autos will be number 1, followed by BFSI, and then by other consumer discretion.
Right. Okay. Got your point. With that, Shant, would like to thank you for taking our time. Always a pleasure, and wish you a very happy weekend and a good year ahead. And of course, I hope to interact much more going forward as well.
Thank you so much.
Thanks a lot. Let's just take a look at the market. We're up 79 points now, almost at the high point of the day, 25,750 on the index. The mid cap index has, is outperforming at the current juncture, gains in excess of 0.5%. The breadth has improved 3:2. That's the NSE advance decline ratio. 1618 advances to 1100 declines at the current juncture. But one stock that will be in focus today, aside of the IT pack, index heavyweight Reliance Industries, because that's reporting numbers today. A steady performance is expected in the December quarter, supported by a recovery in its oil to chemicals business and sustained growth in its telecom and retail segments. Now, these gains are likely to offset weakness in its oil and gas exploration and production business. Now, brokerages are estimating mid-single digit to low double-digit growth in revenue and operating profit from a year earlier, with net profits seen rising modestly amid mixed performance across business segments. Q3 consolidated revenue is estimated to be at 2.5 lakh crore rupees, implying a growth of about 6% from the year ago period. EBITDA is seen rising 10%, while profit is expected to rise 4%. The O2C business is expected to be a key driver of Reliance's quarterly performance, and higher Singapore gross refining margins during the quarter and improved refinery throughput are likely to boost refining earnings, even as petrochemical spreads remain relatively soft. Talk about consumer-facing businesses. They are expected to continue providing stability to consolidated earnings. Reliance Jio's performance is likely to be supported by higher average revenue per user or ARPU and subscriber additions, translating into steady growth in operating profit. Reliance Retail is also expected to maintain its gradual recovery, contributing positively to consolidated EBITDA during the quarter. But upstream oil and gas segment is expected to remain a drag on Reliance's overall performance. So yes, Reliance Industries, the stock is up somewhere around 0.3% or thereabouts, but the stock, after a good performance last year, hasn't seen that greater performance so far this year, and it's come off almost 200 rupees from its highs. But let's see if the numbers can turn the tide and the stock can resume its upward trajectory here on. So that's about Reliance Industries. But another important update today, of course, it's the counting day for BMC elections. The exit polls have projected a massive victory for the Mahayuti in the BMC polls, with the BJP Shiv Sena alliance set to cross the 130 seat mark in the state. In contrast, the Shiv Sena MNS alliance is expected to lag far behind, with projections placing it at just over 60 seats. Congress, meanwhile, is likely to get around 20 seats. Counting of votes begins at 10 a.m. Of course, must have just started, and the results will also be announced later today. So that's one thing that we need to, of course, watch out for. But on that note, we are completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates. I'll see you with Closing Bell at 3 p.m. So don't forget to tune in for that. Thanks a lot for watching. near the low point of the day, and quite a few culprits here when it comes to the laggards. The likes of Eternal, Cipla, Geo Financial, some of these stocks are dragging the index down. Even ITC, for that matter, that stock has been in the red for much of the session. But what's holding out, of course, is Infosys. That's keeping a lid on the losses. In fact, the Nifty at least is managing to hold on to the green territory because of some of these IT names. Particularly Infosys, 5.5% gain after that guidance upgrade. So that stock is up 5.5%. Tech Mahindra, Wipro ahead of earnings. They are also upbeat. HCL Tech is also up almost 2%. So top 4 movers on the Nifty are from the IT pack. Aside of that, you also have PSU banks doing well. SBI among the gainers. For the week, SBI is up 4%. And I want to just talk about Federal Bank, because after good set of numbers, there's a positive surprise in terms of net interest income growth, margin growth, as well as slippages coming down, and the street has really taken it with both hands, because the stock was up I think 10% last time I checked. So on the back of a positive surprise in Q3, shares of Federal Bank have been doing. In fact, all the other mid-cap PSU banks that have reported numbers have seen the stocks rally quite a bit, which is why PSU banks are among the top sectoral gainers this week. In terms of other movers, aside of IT and PSU banks, what's doing well, is I think the metal pack for the week, in fact, but the Nifty real estate pack, I wanted to mention that as well, because that index has been bearing the brunt of the sell-off. Of course, now 2025 saw realty being the biggest underperformer, and 2026 also nothing has changed really. But today we are seeing some buying traction in real estate, because some of the companies that have reported their third quarter updates were fairly strong, and we saw some bit of rally coming in the likes of Ajmera Realty yesterday, even Puravankara for that matter. So yes, realty index seeing some buying, but metals are under a bout of profit taking today. Autos, they were holding out in the initial part of the session, but they have also slipped into the red, and pharma, big drag, Cipla, so pharma is also down 1.5% or thereabouts. On a week to date basis, it's PSU banks, metals and IT, these are the top gainers. 2 to 5% gains on these indices rather, for the week. So all in all, that's how the texture is looking like. But let's bring on board a big market voice to understand, to take stock of the kind of earnings that we have seen so far, how the sentiment is shaping up in the market and what one should be doing at this juncture. Big market voice, Sunil Subramaniam joining in. Sunil, lovely chatting with you. Not sure whether we spoke this year. If we haven't, then wish you a very, very happy new year. Year started on a good note, first couple of days, but then we saw sharp cuts coming in. This week started on a good note thanks to those comments coming in from US Ambassador to India, but that was just short-lived. Sentiment in the market, according to you, do you think it will remain this way? Because FIIs are there's no coming back as of now, for at least for now. So here on kind of earnings we've seen, do you think at least there could be some leg up in sentiment, or will the sentiment remain like this at least until budget?
So I'd say that you've spoken about a lot in the last couple of minutes. So I think, first of all, I'll come to it last in terms of whether the overall index or the market, how it will do. But I think what's important to remember is the big shift in the geopolitical situation with the whole Venezuela matter and the subsequent focus around Cuba, Greenland, Iran, and the like. So what's happened is that, typically mid-December onwards to mid-January, FIs are generally in a holiday mood, and they generally book profits for the year-end bonuses, and they start deploying it in the month of January, but it generally starts from mid-January. So we are just about in that mid-January phase. So I think, first of all, the geopolitics plus the fact that FIs are still assessing various markets based on the valuations means that they have been very thanda, so to speak. So there is no strong buying support coming from the FIS side. Of course, the last 2 days of last week, there was heavy selling by the FIS. So that's the first undertone to look at, saying what's going to happen. I'll come to that later. But on DIS front also, right, it's the same story, that with an earnings season on the way and with the budget expected to come through, there are pluses and minuses on the budget, which I'll talk about. But with that in mind, DIs are not clearly in a position yet to commit capital until they see which sector is giving you a good guidance. So there again, I want to differentiate between good earnings and good guidance, because this is we are now entering into the last quarter of the year. This is the Q3 earnings. So from a perspective of what sector or what share to buy, it's not what's happened already, but what's likely to happen. That's where guidance is probably assumes a significant position in the earnings landscape, not just for DIs, even FIs, because for them also, they're planning for 2026. So they want to buy something which will deliver value by the end of 2026 if they have a 1 year horizon, right? And then I did passing in mention the budget. And to me, the budget this time is very, very interesting budget, because what's happened is that if you see, GST collections have significantly dropped post October, November. I think November and December both were 1.7 lakh crore versus an average of 1.9, which was in the preceding 3-4 months. So clearly the impact of the GST rationalization is showing in the revenues. Corporate direct taxes, both corporate and personal income tax, have shown a very marginal, I think 6% growth in the. Third part is from a revenue perspective, collection itself, you've had a nominal GDP growth in the mid-8s. So clearly the budget had projected a 9.9%, if I remember right, growth in nominal GDP. So clearly the revenue numbers are not yet adding up in any significant way. So the key is what's going to happen to the fiscal deficit this year. Now, I personally feel that the government will meet the fiscal deficit target of 4.4 come what may, because foreign capital is dependent on rating agencies' rating of India, and any slippage there will be a very bad signal. So clearly India wants to be welcoming of foreign capital, especially FDI money. So to that extent, if you're going to keep 4.4% intact with a dropping revenue, 2 or 3 things happen. One is what has already happened is a huge dividend from RBI has come and bailed out the lack of revenue collections, right? And some PSUs have also stepped up their dividend. So to some extent, capital receipts have said that and helped the government. But the other thing the government has done is that though they have done the GST cut to boost consumption, from a government revenue expenditure, they have drastically cut it. I'm talking from April to November numbers which have been published. And CapEx has been surprisingly on board with targets. So clearly the government is clear that they want to keep their CapEx, but they might cut revenue expenditure. Why I'm saying this is, then for this quarter, the government will tighten their belts because they want to meet the fiscal deficit. So government spending is going to be on the decline, and probably a lot of expenditure from this year will get postponed to next year, right? So the budget is very interesting to watch how the finance minister does this whole balance of maintaining. And then we come to the budget also is not so much about this year's report card as much as next year's outlook. So what nominal GDP are they going to forecast for next year? Is it going to be around the 8.5% level? Is it going to be 9, 9.5 or 10? Because a lot depends on that, on how much money the government will have to spend. And then the choice comes between whether you spend on public capex or do you spend with more giveaways, like the GST cut, like the income tax cut. Do you try and put more money in the hands of the public? So it's a big call, but that all depends on what nominal GDP you're going to project. Because this quarter's earnings will somewhere show you with the GST cut playing through in consumption. Other than auto, top line numbers haven't really shown that. So there's an expectation that next year it will play through. So why I'm saying the budget assumes a huge importance for all the reasons I said. So it would be, I wouldn't use the word foolish, but it is not advisable to go and commit your money, capital, whether it's FII or DII, before you get this government's report card plus projects for the year out in the open. So till first of February, when the budget comes in, I would say that nobody is really interested to go and buy. Now, in the meantime, what happens? Some sectors come through positively, some others come through positively. That gives you a clue that the rest of the company in the sector, IT for example, a good set of forecast guidance is now pushed up all the IT, right? Similarly, a good set from a realty big player has pushed up. So, but remember, if fresh capital they're not going to commit, it's going to come through sector rotation. So if whatever goes up, something else will come down. Okay, so I would say that till February 1st budget, you are going to see a sideways plus or minus max 1% move in the market and the indices. And after that, depending on how the budget goes, the momentum can pick up quickly, or maybe another couple of weeks for the earnings season to fully play out. By mid-February, you would have a fair idea about the earnings pattern across, right? May not have it by 1st February, but 15th February. So by then you'll be clear that where do I commit my capital? and they are, like I said, the FI return. So I would say that I would actually stretch my thought process and say till mid-Feb, you would still see a consolidating market. It will not correct big time because any sector which disappoints, there will be bottom buying. So there is enough liquidity in the market with DIS to support that. So that's a summary of my thought process. So like I said, earnings season, budget, this is more the time for studying the economic survey numbers to look at what it's going to look like. The good news here has been, I think the export numbers have been good for the year. Despite all this tariff jhanjat and all, decent export numbers from what I saw. Other good or bad news, I would say, is the credit growth being very good, but credit deposit ratios exceeding 80% means deposits are clearly not going at that fast, and
Yeah.
hence banks and NBFCs are more forced to rely on market borrowings to finance it. So if you do market borrowings, then automatically your NIMs are a little bit lesser. But if the volume growth is good enough, it can make up for that. EPSs should grow. So I'm saying there's so many factors now to look and study that it's an interesting time to do that. But I would say it's a better time to sit on the sidelines and study all of this and wait to commit your capital.
Right. Oh God, quite a few takeaways there. But two big takeaways right now is the time to sit on the sidelines and not go aggressive hunting in the market. And secondly, by the looks of it, it looks like a strong pre-budget rally could be ruled out for now, because you said either 1% kind of move could be anticipated, but not more than that, right? Okay, let's take stock of the earnings season as well. I'll talk to you about your budget expectations as well in just a bit. But in terms of earnings season, whatever you've seen so far from the large cap IT names, what have you made so far in terms of the demand environment and of course the big AI spend that these companies are making? Of course, Infosys guidance upgrade has really cheered street, but some experts have said that HCL Tech perhaps may have done better, but it's Infosys that's hogging the limelight because of this good news of guidance upgrade. But what have you made? We've seen 3 large companies reporting numbers from the IT pack. What have you made? Has your view changed at all? And how would you look at it?
I don't know if you remember, I've been positive on IT for the last few times that we spoke. So for me, there's no need to change view. I continue to remain constructive and positive about IT. So to me, because I would still say that we are going to be on a depreciating rupee this year. So that's a tailwind for IT. The second is that I've always believed that the Indian IT companies carry enough cash on their balance sheet to really make the big AI moves in terms of either investment or in terms of buying out through mergers. You've seen even mid-cap IT companies out and doing buying. So I'm really confident that they will adapt and change, right? The third thing is, of course, is that the US environment. For example, if you see, US numbers are still belying it, they're coming stronger, right? So I think that the US growth, if it's good, that's very good for IT companies, right? And the fourth thing is that as a byproduct of the fact that I think that the trade deal will get done sometime. I know we still get the order Trump tweet or somebody saying something and it doesn't look like it's going to happen soon. But if I take to me my thesis that 2026 we will see the trade deal come through, what I'm saying is that's the biggest trigger for FII flows to return. And in FII's return, IT is a very strong pick for them for 2-3 reasons. One is that they understand the buyers of IT. So they are able to fact check the IT guidance numbers very well with a counter check with the buyers of IT products in the US or Europe. That's number one. Number two is that IT is a natural hedge to them against rupee depreciation. Because on the one hand, rupee depreciates, their portfolio value goes down, but IT's earnings get a leg up due to rupee depreciation, so there's a hedge against that. So that's an ideal sector for them to invest in, right? So, and the third I said is that in this whole AI play, Indian IT still remains the non-AI IT play. The rest of the world IT is all only AI, and AI, right? So if you want to hedge yourself against AI, Indian IT is a good play. So for this reason, I'm saying constructively that FIs are still not coming back to India. So IT will really get a leg up when that decisive move happens. The point is that I can't say when it will happen. I'm saying it will happen sometime in the year, but it's better to buy when people are asking why rather than when people are asking why not. So I've been in the favorable IT camp for quite some time now, and I continue to hold that view that you keep buying
Yep.
regularly.
In terms of the demand environment, there was some commentary that was made by TCS and Infosys both in terms of discretionary spending, etc. On that front, what did you make of it?
I think it's good, and the US discretionary they spend consumption numbers are standing up quite well. Tariff hasn't proved to be a negative. It's obviously fed into inflation in the US, but user consumer sentiment hasn't got affected. It is growing well. So I think that discretionary consumption is something that is holding up in the US, and hence for IT to go and service those industries, that's good news. Second is that all those industries, even not just discretionary, even manufacturing, are going through AI related rejigs. Everybody is trying to focus on costs and reduce their labor force in the US and all of that by using AI. And I think AI consulting is the big play for IT this year and all the user industries. So very often people mistake AI to be a tech play. See, AI is a thing which is like an industrial revolution. It affects the whole spectrum. You name the industry, they want to use AI to rationalize, standardize, to do that. So consulting for AI is a huge, big pot. And Indian IT companies are going to compete, and that's what they are starting to do. So to me, actually, Indian IT companies will take advantage of this AI consulting play in the user industries in the US. And I think that from that point of view, for me, the demand environment in the US, it's the one place where, that US is not slowing down. It's growing, means it's positive for IT. So I read that from the guidance that both the IT, TCS and Infosys have said.
Sure, of course, and as we speak, the rupee, in fact, I think is weakening even further around that 91 mark. But talk about other sectors as well. What are you expecting from the cement pack, so to say? Some reports I was reading, they were expecting price cuts to weigh on cement margins this quarter, despite demand being healthy. Do you see this margin pressure as temporary or more structural, and does it keep you cautious on the sector for now?
I think they had a blowout last quarter. So a lot of expectations have risen because of that. Cement had a very strong quarter last quarter. So clearly that can't be repeated because, like you said, cement prices have been slightly declining. And because of which I expect you will say margin pressure, but you're talking about a very high margin coming down to a slightly higher margin. So it's not margin pressure which is taking down to a low margin. There is going to be margins coming down from the previous quarter. And I think it'll last for one more quarter and then pick up because I have a strong correlation between the cement as well as the private capex and the housing and realty pickup, which I expect to be strong drivers in the second half of the year. So I would say cement demand and prices for cement would shoot up in the second half. So maybe there will be a reduction in margins this quarter and maybe one more quarter, but that's okay. It still be healthy margins to me.
Okay. Okay, margins will ease a bit, but they will still remain healthy, and perhaps after a couple of quarters, they will start picking up again. That's about cement. But before I let you go, what are your budget wish lists? I mean, we all talk about LTCG, STD, every budget. But from a market standpoint, what would your wish list be, and what would you like? What would your message be to FMC Taraman?
See, ultimately, I know a short-term wish list is for LTCG to be dropped or to go away, STT to be taken away. So these are the typical short-term market. As a market participant, you hope because that will give an immediate pop to the market. But I would rather say that my experience of the budget, that will give a boost to the two Ps, which is private capex and private consumption. I think that's the story because government capex has been steady, 11 lakh crore, maybe this time they'll do 12.5 lakh crore. It's just the same thing continuing, but that's not the delta. The delta, last year they started with the tax cut and then they followed the GST cut. So they have to boost private consumption. They have to make the Indian consumer want to spend. I'm saying a lot. Because they've given so much money in his hands, but still other than buying cars, they're not going in spending. So I think the budget, if they can act in a way that it triggers consumer spending, and the second aspect of it is the follow through will be private capex, which will follow consumer spending. But if the government can do like PLI, expanding the PLI, can bring in public-private partnerships in a greater way, they can do a lot of incentives for private capex. I would be the happiest because I see private consumption and private capex as the two critical the shoulders which have to lift the economy up from our current growth rates to closer to double digit. And for that, one important thing, which is not entirely a budgetary thing, but maybe directionally in the budget, it has to trick toward that we have to reinflate our economy. This low inflation, especially on food, is hurting rural economy. So I think while markets would like a lower rates for RBI rate cut to boost equities, I think that's not healthy for the economy. It's not healthy for EPS growth because nominal GDP will come down. So boosting nominal GDP back again through a bit of reinflation, and if the government can do whatever it does through the budget, RBI governor will do his part in when it comes to the policy. I think that's a critical part where I think whatever the budget does from that perspective, I would welcome it. We need to reinflate. We need to pick up private consumption. We need to keep up private capex. These are the three main things which I think the budget can support. I would be very, very happy.
All right. Okay. Point taken. Hope that happens as well. But of course, we will have many more conversations around the budget as we wait for the 1st of February. So I look forward to more interactions as well ahead of that. Sunil, thanks a lot for taking out time and joining in this afternoon.
Thank you.
All right, then that was Big Market Voice, Sunil Subramaniam, with his thoughts on barrage of sectors and of course what he is expecting from the budget this time around. Just take a look at the market. We failed. We're just around that 25,700 mark, but near the low point of the day. Started off on a good note. We picked up traction. We were looking to reclaim that 25,900 mark, but it didn't really happen. But what we saw is a cool off, and the Nifty struggling to hold on to even 25,700 at this juncture. But of course, it's Reliance Industries numbers that are awaited post market hours, and that stock has also come off from the day's high. That's of course an index heavyweight, and Reliance coming off day's high means the Nifty also follows suit. But what's supporting the index is a 5 to 6% kind of gain on the shares of Infosys. Other tech names also quite upbeat, the likes of Tech Mahindra, Wipro. They will be reporting numbers right after market hours, and they are doing well. HCL Tech as well, following suit, 2% gain there. A lot of other movers as well. On the flip side, Asian Paints, even though there's been a crude comfort, but Asian Paints hasn't really picked up. The stock has been doing well in recent times, but still in the throes of selling. But what's doing well on the back of a dramatic drop in crude prices, 6% drop overnight. We are seeing shares of OMCs doing well, the likes of HPCL, BPCL, IOC, those are doing well at the current juncture. But just about 2 minutes to go for the markets to shut shop for the week. Let me bring on board Vishal Malkan, technical analyst, Malkan's view. Vishal, just about 2 minutes left. I wanted to understand what your BTST idea is before we talk about index and other stocks.
Hi, I think we are looking at a very strong close in certain stocks, especially Bank Nifty and banking stocks. So I definitely look at BTST idea as my stocks for tomorrow or Monday would be RBL Bank and Indian Bank. Both have broken out above their resistances and they are showing good momentum. Should be a good bet for Monday morning.
Okay, those are the banking stocks. Good bets for Monday morning. But what do you make of the move on the index? We came very close to 25,900, but that was not to be. We couldn't really clock that level, and now we are even struggling to hold on to 25,700. So whatever pop we see, it kind of ends up reversing, right? So that's what happened today. Sell on rise, that seems to be the strategy at the juncture.
I don't think so, but I would look at the other way, like Nifty is caught up in a range between 25,600 and 25,900 since last 4-5 days. So till we don't have a conclusive breakout out of this range, we should not take a call. But overall on the higher time frame chart, which is weekly and monthly, the trends are still strong. And most importantly, Bank Nifty is outperforming the Nifty chart, which is a good sign that we should look at only the north side and not on the south side. So I will go sector specifics and especially on the banking side.
Okay, of course, very bullish view coming in on banking as a pack. Both PSU banks and private banks have been doing well this week. I think they are among the top sectoral gainers. But Vishal, just 1 second, we'll just take stock of market close. 3:30 on the clock. So yes, we've shut shop around 25,700 on the Nifty. The mid-cap index gave up almost all of its gains, just marginally in the green. Breadth of the market skewed in favor of laggards. 1256 advances to 1719 declines. Of course, there's been a reversal in the market breadth as well. Bank Nifty, as we were discussing, it has cleared that 60,000 mark. Remember, we have two heavyweights, ICICI Bank and HDFC Bank, reporting numbers tomorrow. So ahead of that, we've seen good traction in shares of HDFC Bank today, that was gaining, but ICICI Bank, which has been a rank outperformer, was out of favor in today's session. So some pre-positioning happening before the numbers. Also after market hours today, Reliance Industries will be reporting numbers. So the stock did come off its day's highs, but ended the day in the green. Yes, it was over 1% of its day's high, but nevertheless ended around 1460 or so, up 0.2% ahead of numbers. On a weekly basis, metals, IT, you have PSU banks. PSU banks, of course, were among the top gainers, and we'll talk about some of the stocks on the PSU banking side. Of course, some stocks have already been pointed out by Vishal, but we'll talk about others that were rallying today as well. Those were the top gainers for the week. But in terms of the weekly movers, ONGC, Tech Mahindra, Tata Steel, Infosys and SBI. These were the top 5 performers of the week. Infosys buoyed by the numbers, the guidance, and doing well, and SBI as well. I think this week it hit a fresh 52-week high as well. On the flip side, Cipla, L&T, Maruti, Sun Pharma, these were among the top laggards. We were discussing stocks from the banking lot, and of course you have pretty
since last few months, and after this one correction which we had, which we can call it like a healthy correction from 270 to 240 in the last few days, has been recovered in just one day and is back to its new highs. So I think Federal Bank has clearly given a signal that it's ready for new moves on the upside. So I'll go with Federal Bank with a target of 290 to 300 in the next few trading sessions.
Okay, Federal Bank is of course preferred, and the stock a star performer today on the back of strong numbers. But let's shift focus to the pharma back as well. Hasn't done well this week. In fact, pharma has been in a spot of bother. Today, Cipla in particular, dropped somewhere around 3%, and for the week as well, it is emerging as the top laggard on the back of stoppage of a pausing of key drug manufacturing in the wake of US FDA setback. But how would you look at some of these pharma names, especially Cipla, after today's crash?
I think Cipla has been in that zone for a while, and we can look at that chart. It's trading in that 1400 levels since a long time. So I would look at that as a consolidation phase and nothing much to worry about. And as it is, pharma is not the flavor of the month, as we can see that clearly the commodities, the metals and banking sector has been outperforming all other sectors by a big margin. So if I'm a momentum trader or a short-term trader, I would look at outperforming sectors, then get into pharma stocks.
Okay, outperforming sectors. Of course, metals had a bit of a down day, although this week has been extremely good for metals. What would you do? Of course, it is an outperforming sector, but would you advise taking some profits, or would you still say go out there and buy a few pharma metal names?
So as per the simple rules and basic rules of technical analysis, we always go with the trend. Of course, also we need to consider the risk reward ratio when it comes to trading. So I would look at any of those metal sectors, especially like Hind Zinc or National Aluminium or Nalco or Hindalco or VDL, to be as a buying opportunity stocks only when we get a decent dip, which we have seen a bit today. But I think we can have a couple of more days where we can look at another 2 or 3% decline, where we can get good buying opportunities on the metal stocks.
One more stock that I will talk about is L&T. The company, the stock came under a fair bit of selling pressure on the back of news flow around Kuwait orders. But today it has won a large hydrocarbon order worth 2,500 to 5,000 crore rupees. The stock, of course, did come under selling pressure. Today, of course, it ended pretty flat. But how are your thoughts, or how are you aligned on the charts when it comes to a Larsen and Toubro? Because the stock hasn't really been able to pick up. In the middle, it did see some buying interest, but after this bit of news, it has once again fizzled out. So any thoughts on L&T in particular?
No, I think what we saw in L&T in the last four or five trading sessions, there's a big decline, and we can see that that clearly shifts the short-term trend from being bullish to at least if bearish, if not bearish, then at least sideways. So it will take some time to climb back that action which has done the damage in the 4-5 days. So I look at L&T as an avoid stock for the next few trading sessions before it starts moving up again.
Okay, L&T short-term trend reversal and avoid for the next few sessions. But capital market plays post numbers were clearly the flavor. This week itself, you could call it that, because after Grow reported numbers, it has seen a good 9 to 10% up move. Angel One has gained somewhere around 15% in a matter of 5 days. 361 BAM was also fairly upbeat. So, any of these names that caught your attention, and which one would your preference be?
I think Angel One would be the clear winner because the way it has moved in the last 4 days, and especially today with the big candle with a gap up and crossing all the previous levels of resistance, as well as the momentum indicator entering into bullish zone with high volume. All technical signals show that it's a clear breakout. So I'll go with Angel One as my top pick for that sector. Of course, we can even see a short correction, maybe 1% or 2 in the next couple of trading sessions, which would be a good dip to buy.
Okay. Buy on dips and Angel One looking best poised on the charts from all of these names that I mentioned. But there's some stocks that were buzzing on the back of order wins, the likes of Zentech. It has bagged a 400 crore rupee order from the Defence Ministry, and of course Kernex Micro as well. That was buzzing on the back of a Kavach order worth 2,465 crore rupees. All these stocks, as we are heading into the budget, I mean it's around this time that we see all these stocks starting to buzz, and that's exactly what has been happening. If you look at shares of Zentech, it has gained somewhere around 7% in the last 5 days or so. Of course, taking into account today's move as well, but the stock has was under pressure last month or so. It has shed 3% or so. But any of these smaller defense names and railway names ahead of budget that one should dabble into?
Yeah, I think Zentech looks good because the way it has been moving in the last few trading sessions shows that it is ready for that what we can call as a pre-budget rally, and of course followed by a couple of news as we can see on the screen. So I can definitely the momentum can continue for next few trading sessions, and we can look at another upside of at least 7 to 9%.
Okay, that's the view. Another upside of 7 to 9%. Of course, this is the time these stocks tend to start moving up. But another stock that was in focus today, Vishal, was India Mart Intermesh. Shares clocked largest single day gain since July of 2023. There's a marquee fund, Nalanda India Fund, that has bought nearly 11 lakh shares via a block deal. It really got the shares excited. Ended higher by 7%. The stock has, in fact, given positive returns in the last 1 month as well. So, any thoughts here? It's 2265. That's where it's at, but it's still a while away from its 52-week highs. Would you say that this is, the start of a fresh up move in the stock?
Definitely, what we use in our technical language is called something called as a loud move. Loud move means very big move with big volume in a single day or couple of days, and that's what has happened with India Mart today. It gapped up from its previous price, which is yesterday, with a big gap, and then there is huge volume and a good percentage gain, closing above the resistance, and also to close near the top of the day is a good sign that shows that the downtrend is over, and we are looking for a fresh uptrend in this stock.
Okay, looking for a fresh uptrend there. But tell me, we're talking about all the results that are due. Almost 30% of the index reporting numbers from today to tomorrow. Reliance Industries, that's the first one. Of course, it's expected to hand in a steady report card, but the stock has come off quite a bit after hitting its highs, right? So, what's the pre-positioning like in Reliance Industries?
Looks like it had a decent correction from the top levels, which is 1600 to now almost 1450, which is almost like a 10% dip. and 10% is always a healthy correction when the overall trend of the stock is good, and we can just look at maybe 1 or 2 more days of consolidation, or maybe 1 or 2% in further, but 1420-25 seems to be a very strong support for Reliance to bounce back.
1425, that support level, keep that on your radar. And what about the banking heavyweights, ICICI Bank and HDFC Bank? Although ICICI Bank has been a rank outperformer, today it was just the opposite. We saw HDFC Bank ending in the green and ICICI Bank clocking some losses. Here, how is it poised? Would you like, do you like ICICI Bank better because it has been an outperformer, or would you say that HDFC Bank is showing signs of bottoming out because it has slipped 6-7% ever since it reported its third quarter update? So here, your view?
I think ICICI Bank and HDFC Bank both have been overall a good stock category, but as far as returns are concerned, and if I'm into a momentum trading kind of a thing or a short-term trading, then I would look at more of PSU banks and the stocks like RBL Bank, Indian Bank, Canara Bank would be much better bets than the private sector banks.
Okay, so all those banks are much better than these banks. But let's talk about some of the other names. I just want to talk about the likes of HPCL, IOC and BPCL. Of course, on the back of a sharp fall in crude prices, we saw them doing well today. But of course, they've already seen quite a bit of a run up. So from a risk reward perspective, how are you looking at some of these OMCs, and how would you approach the upstream names now? MRPL saw good numbers, it reacted to it on Wednesday. ONGC, etc. were out of favor today, of course, same reason. So within the upstream and downstream, what's the preference from a risk reward perspective?
I think both HPCL and BPCL have had their share of correction in the last few days, and today both have shown a bullish candle at support levels. That means they are ready for kind of again an up move towards their previous resistance, which are almost from here, like almost 10% from here. So we can look at some kind of upside in that, as well as now when we look at the other ones which you mentioned like MRPL. So when I'm looking at the chart of MRPL, I can see that there is kind of consolidation which is going on in the last few days between 140 and 150, 155. We have been seeing a steady rise of volume in the last few trading sessions, so definitely it's just a matter of time before it closes above that 160 level, after which we can see some good momentum trading in that to look at the levels of 190 or 200 in the next few trading sessions.
Okay. Another result candidate was L&T Tech. Although the IT pack was shining, this stock down 8% in today's session, and even at a time when other IT stocks were outperforming, this wasn't doing all that well. In fact, since 23rd of December, the stock has tanked 17% almost. Fresh weakness or fresh breakdown, how are you viewing today's crash in the share prices?
I think L&T Tech, like compared to other IT stocks, especially Infosys, when it had a good up move today, in IT space I would be more of stock specific rather than taking the whole sector as like prima facie. So I would go with stock specific chart ideas and breakouts rather than taking the whole IT sector together. So I will avoid L&T Tech for the time being, as it is consolidating in that range what you mentioned, and look for outperformers, something like Infosys, or even for that matter we can look at HCL Tech.
Okay, that's about IT names. All right, then with that, Vishal would let you go. Thanks a lot for taking out time and joining in. Of course, have a great weekend, but lots to watch out for. Still Reliance Industries left, ICICI, HDFC to watch out for. There'll be lots to talk about next week as well. But we'll catch up sometime soon. Thanks a lot for taking out time and joining in this afternoon.
Thank you so much, and have a great weekend.
Thank you. Well, those were some views coming in from Vishal Malkan on various charts and the stocks that were making headlines today. But one big headline that we will be getting later in the evening is Reliance Industries results. It is expected to report a steady performance and supported by a recovery in its oil to chemicals business and sustained growth in its telecom and retail segments. Now, these gains are likely to offset weakness in its oil and gas exploration and production business. Brokerages are estimating mid-single digit to low double-digit growth in revenue and operating profit from compared to a year earlier, with net profit in fact seen rising modestly amid mixed performance across business segments. Consolidated revenue for the third quarter is expected to come in at 2.5 lakh crore rupees, which will imply a growth of about 6% compared to last year. EBITDA is seen rising 10%, while profit is expected to rise 4% on a year-on-year basis. The O2C business is expected to be a key driver of Reliance's quarterly performance this time around. Now, higher Singapore gross refining margins during the quarter and improved refinery throughput are likely to boost refining earnings, even as petchem spreads remain relatively soft. Consumer-facing businesses, of course, are expected to continue providing stability to consolidated earnings. Now, Reliance Jio's performance is likely to be supported by higher ARPU, average revenue per user, and subscriber additions as well, translating into steady growth in operating profit. Reliance Retail is also expected to maintain its gradual recovery, contributing positively to consolidated EBITDA during the quarter. But upstream oil and gas segment is expected to remain a drag on overall performance. So, yes, big numbers to watch out for. The stock did come off from the day's high, but Vishal was mentioning that 1625 would be a crucial, 1425, I beg your pardon, would be a crucial level to watch out for before the stock makes a turnaround. But that's not all. Tomorrow we have some big banking earnings. So, as I was saying, 30% of the index will be reporting numbers, between today and tomorrow. What should we really expect from banking earnings? Now, loan growth is expected to outpace deposit growth. That's of course a matter of concern because that would impact liquidity. Margins, asset quality, these are seen stable despite deposit pressures. Loan to deposit ratio for HDFC Bank has been above comfort level, and that would perhaps be a cause of concern, but their pickup in loan growth and stable asset quality, that could be some positives to watch out for. Funding pressures, as I mentioned, there will be pressure on deposits as well, so funding pressure is likely to persist. But profit growth is expected to improve. Brokerages are expecting a profit growth of anywhere between 3 to 6% for large private banks. In fact, NII or net interest income is also expected to grow by 6 to 8%, for some of these private sector lenders. Analysts are looking out for double-digit loan growth, and in terms of commentary, what will be crucial to watch will be what the management really says about deposit mobilization. That is something that the street will be watching out for. Margins are also likely to remain stable in the third quarter. Now, brokerages are saying that the impact of recent rate cuts will only be felt more meaningfully in the next quarter. So, of course, that means that in the near term, banks may be able to defend their margins. Slippages in unsecured and microfinance loans are likely to ease as well. So, these are some of the factors to watch out for when you look out for numbers from HDFC Bank and ICICI Bank. Of course, the stocks will be reacting to the earnings on Monday. So, yes, it will be a action-packed weekend. There will be work, but yes, big numbers to watch out for when it comes to the market. But in terms of some movers today, let's take stock of some of the Nifty 500 laggards in trade today. HBL Engineering, that stock was down somewhere around 10%. In fact, right from the start of the session, this stock has been clocking in double-digit gains and ended the day, almost with a 10% cut. L&T Tech, guidance cut, and of course, the fact that the company will not be focusing on certain countries in terms of projects. So, that is something that kind of led to this kind of a fall in L&T Tech. You have GE Vernova, that was among the laggards, down 6%. Lemon Hotels, that was also down somewhere around 5%. Engineers India, MRPL, after the good rally that we saw on Wednesday after numbers, fizzled out, down 5%. Also, the fact that crude came off quite significantly overnight had an impact on upstream companies. Hitachi Energy, that was down 4.5%. Patanjali Foods, Eternal as well was down another 4%. So, yes, some pressure, selling pressure on some of these, platform companies as well. MMTC was also down somewhere around 4%. In terms of the top gainers, Federal Bank, we've already discussed that. That was up almost 10% on the back of good numbers. Capital market plays like Angel One were active, Zentech on the back of order win, India Mart, Intermesh, Block Deal, of course, key marquee fund buying stake. So that stock was up 8.5%. HFCL, that was up 5.5%. You also had AU Small Finance Bank, that was up somewhere around 5% or thereabouts. So all in all, an okayish week. The way we started the week, one would have thought that we would clock in strong gains for the week, but we just ended marginally higher for the week. Just about in the green for the Nifty for the week. Flattish. But in terms of sectors, as I mentioned, it was IT, PSU banks, metals. These were the sectors that gained anywhere between 2 to 5% for the week. And in terms of some of the weekly movers, top gainers include the likes of ONGC, Tech Mahindra, Tata Steel, Infosys, SBI, Hindalco, even Ultratech Cement. That stock gained somewhere around 4% for the week. On the other hand, you had Cipla, negative news flow. Today itself, the stock was down 3%. Pharma has been out of favor all of this week. Cipla was down 5%. L&T, there was some pangs in terms of orders when it comes to Kuwait. So that kind of weighed in on the stock prices. In fact, Vishal also mentioned that the short-term trend looks like it is in the negative. Autos have also not had a very good week. Maruti down 4% for the week. Sun Pharma, Geo Financial, Dr. Reddy's, Eicher Motors, and even Asian Paints. Despite that 6% fall on crude prices, Asian Paints failed to really pick up today. ITC, HDFC Life, and even Interglobe Aviation, Indigo, I beg your pardon, that was down somewhere around 2.5% for the week. So all in all, we did try to make a dash at that 25,900 mark, but failed to really reclaim that level. And in fact, for the day, we ended almost near the low point of the day, even managing to not defend that 25,700 mark on the downside. So yes, all in all, that was the market for you, and that was closing bell for you. Lots to watch out for on Monday. We'll be taking stock of 3 big numbers. Reliance Industries, you also have ICICI Bank and HDFC Bank, among others, that will be in focus. So with that, we are completely timed out on a closing bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and we'll see you with the markets on Monday at 9 a.m. So don't forget to tune in for that. Thanks a lot for watching.